moving to Italy or you're an Italian tax resident, I have a bad news for you. Not only you're paying property taxes on your beloved home abroad in your home country, but Italy is also asking you to pay taxes on it again. It's not a joke, but a very real and very expensive reality that catches a lot of expats out there off guard. This is the silent threat of the double taxation on your foreign properties, often hidden within a section of your Italian tax return called Quadro RW framework. The first thing we need to understand is why Italy cares so much about your foreign property in the first place. If you're considered an Italian tax resident, and as we discussed in the previous videos, it's not about where you live, but where the center of your interest is, then Italy requires you to declare your worldwide assets. And this comes with bank accounts, financial statements, and yes, all your properties located outside of Italy. And this declaration happens in a specific part of the Italian tax return called RW framework, Quadro RW. Now, many people may think, okay, I declare it, but I already pay tax on it in the other country, so I'm safe, right? Well, not quite. Without the right application of specific rules, Italy might assess taxes on that property again. Let's pick Maria. Maria is an Italian tax resident and she owns a beautiful holiday apartment in France. She inherited it from her family. The apartment is 300,000. Every year she pays local property taxes in France, let's say 1,500. She also rents it for part of the year, earning 10,000 rental income, on which she pays French income tax. So when it comes to the Italian tax return, Maria correctly declared the apartment in the RW. However, she simply declared it without applying the dual taxation relief mechanism. That means that she forgot to apply the 1.06% and credit the 1,500 paid abroad. So, how do we avoid costly mistakes like this one? The key lies in understanding applying the foreign tax credit provided by the Italian law, and in some cases, specific dual taxation treaties between Italy and other countries. In this case, to avoid the EVA, that's the name of the dual taxation on the French property, Italy allows a credit for the property taxes already paid abroad, up to the amount of the EVA due. So, since Maria paid 1,500 to the French property tax, she could use this in Italy. This is a huge saving. For the rental income, the situation is pretty close, is similar, but often involves tax treaties. In Italy, there are hundreds of dual taxation treaties with many countries, including France. These treaties typically, okay, don't take it as a rule of thumb, typically state that while Italy, as a country of residence, can tax worldwide income, it must grant a credit for the income taxes paid in the source country. So, let's say Maria's 10,000 French rental income, on which she paid 3,000 in French tax. So, Italy will estimate the personal income taxes due on that income and then allow her to deduct the 3,000 already paid to France. So, let's say that the taxes to be paid in Italy are 3,500 minus the 3,000 already paid. She owns just the 500 difference. The point is, she won't pay the full amount twice. But this is not automatic. This requires precise estimate and declaration in specific sections, frameworks, boxes of the Italian tax return, ensuring every detail, even checkbox, is correct. It's about knowing which boxes to tick and how to estimate the credit. Now, let's look at another common, very more dangerous scenario. This is about not declaring your foreign property in the RW framework, perhaps for ignorance or thinking Italy won't find out. Let's imagine Julia. She has a small apartment in Berlin, and she forgot to declare that in the RW. What's at risk? Well, let's say if Julia's undeclared Berlin apartment, it was valued, let's say 250,000, and she had 8,000 rental income, she has some massive penalties pending, ranging from 3 to 15% of the value of the asset per year. So we're talking about 7,500 per year, plus back taxes, interest up to 240% of any taxes due. And in this case, Julia's mistake was not just about missing a tax credit. It was about failing to comply with the fundamental obligations to the Quran. The belief that they don't know is a dangerous misconception in today's financial world. Even if the actual tax due after the credits might have been minimal, the penalty for non-declaration is huge. The RW framework, the Quadro RW, is not just another section of your tax return. It's a critical step to avoiding financial penalties and ensuring you don't pay more than your fair share. Understanding how to correctly declare your foreign properties, accounts in general, and crucially how to apply the foreign tax credit is essential for any Italian tax resident with assets abroad. We believe that peace of mind comes with clarity and proactive planning. If you own a property abroad and you're an Italian tax resident or planning to become one, please seek professional advice. Don't risk dual taxation or penalties.
At Studio Rigo, we provide world-class tax and financial guidance for expats and international professionals in Italy. We don't just help you stay compliant. We craft strategic tax solutions tailored to high-level individuals who demand precision and expertise. If you are serious about optimizing your tax position, visit our website or connect with us on social media. We work with those who value excellence, and we look forward to assisting you. Thank you for watching. See you in the next video.